Good morning. Thanks for having me. I think, as you've already alluded to, it's a little bit of travel and arrive here with the earnings generally. For me, none of the four big names reported particularly wildly out of line with what the market was expecting. I think from a key highlight point of view, Facebook and Google both reported about twice the growth rate the market had expected. So that was clearly a positive, suggesting a faster bounce back in digital advertising than had been anticipated by the market, and very much in line with what we'd already seen from Pinterest and Snap. Apple clearly was lackluster. Some uncertainty, I think, about exact timing of the iPhone 12 launch and the 5G opportunity, and the fact that they didn't give guidance, I think, reflects that more than anything else. Will this be a super cycle or not? It's very hard to tell at the moment, but we will see pretty clearly either in the next quarter or the quarter after. But it's very hard for them to know where the sales will sit in those two quarters, which is why I think they pulled their guidance. And then, of course, Amazon, which blew away the numbers, extremely strong. But again, to what extent are we down the path of this? There was actually a really interesting quote from Sheryl Sandberg on the Facebook conference call. She said that they'd seen the equivalent of 4 percentage points worth of switch from offline to online in terms of retail penetration in just 100 days. So we've clearly seen an acceleration of ongoing trends. And so the big question, I think, for the market, and the reason that shares generally traded lower afterwards, is to what extent is this now already priced in?
Mark, there are a couple of features in what you mentioned. Advertising had jumped back, and that was important for some of these platforms. But the other point you make about Amazon, as we take a look at very decent numbers, was the ramp up in costs. And the market was a little bit shocked by the level. So at $4 billion in costs. And effectively, they pointed to some of the productivity headwinds. You've got social distancing in some of these warehouses, which really impacts their productivity. What did you make of some of those features? I mean, we've seen it with some of the other retail companies right here in the UK with the likes of Tesco and Sainsbury's as well. So what did you make of that feature in the Amazon numbers?
Yes, as you point out, that was the blemish within Amazon in sense compared to what the market was expecting. So they guided down on profitability for the next quarter due to the $4 billion of what they've termed as COVID costs. So I think you're right. And the question is, will that go on longer than one quarter? There's another issue which is quite interesting, and there's a dearth of potential fulfillment. So there was a number out in the market last week, I think it was, suggesting that up to 7 million parcels per day in the US are short of what is available in terms of capacity for shipping. So I think there's actually going to be a fulfillment issue in general, not just the social distancing measures. And that's causing a real headache for many of these e-commerce companies.